Okay, I am recording right now. Sorry about that. So this was on not necessarily an error, but this is where you have to think about what the risks are and what the maximum rewards are. And we don't do. I would say that in general we do more debit spreads than we do credit spreads. We certainly do credit spreads. We do credit call spreads. We do credit put spreads. We do credit iron condors. Very, very rarely do we do a debit iron condor. I'm trying to remember the last time that we did one. But usually what we're trying to do with an iron condor is take advantage of that high implied volatility. So ideally, and Brendan, ideally on something like this, where do we want to be? So we've sold this put, we've bought this put, we've collected $2 to get into this thing. Exactly, above 14.15. Above 14.15, we have a short put that's worthless. We have a long put that's worthless. We've collected $2. We keep the $2. What if we go to 2,000? Doesn't matter. Still two worthless put positions. Most we can make on a credit spread is whatever we collect in premium. Okay, so now the question becomes, well, then what are my risks? We figured out what the reward is. Maximum reward is $2 or $200 per one lot that you do. Well, as we go below, so let's just say that we go to 14.14. Well, now I have a put that is since I'm short that put and we are below here, that's $1 against me. My long put that I bought for protection is still worthless. So I lose $1. I still get to keep my $2, theoretically, at least to start with. That $2 is in my account. Now what happens at expiration, that's when we settle up. So we go to 14.14, we start to eat into that until we get whatever the width of the spread is, or not the width of the spread, whatever our short put is, less whatever premium that we get in, which is 14.13. Because now we have a put that's $2 against us. Our protection put is still worthless. We lose $2. Initially we took in $2. That's a break even. For those that are cheating, I put these calculations in there for you. This tells you what the break even is on a credit spread. If we were on the debit spread, you'd be looking at this side, but this is a credit spread. So that's your break even price. Where's the worst place that they can go to? A spread like this. Somebody out there's got to know where the worst place this is. There's 160 of you guys in here. Exactly. No, well, that's not the worst place. That's where you start to actually lose money. So if we go to 14.12, well, now we have a $3 put, a $3 losing put position. Our 14.10s are doing nothing for us. We lose $3. We get to keep the $2. Now we lost $1. Exactly, Brandon. Anywhere from 14.10 or lower is the worst that this can happen. Because now we have a short 14.15 put that's $5 in the money against us. Our protection put has not kicked in yet. We lose $5. We took in $2 to put this risk on. We can lose $3. So we're laying 1.5 to 1 in an odd sense. What if Google goes to 0? Exactly. If it goes to 0, it doesn't matter. Because why? Because we bought this protection. So if we go to 0, now we have a put that's $1,415 against us. That's not great. But we bought protection. And we have a put that's long that's $1,410 in our favor. Still, that net, we lose $5. We keep the $2. And so we lose $3. That's why we just don't sell naked premium. Because you can really hurt yourself. Okay, so it's important. So, remember at expiration, there can only be one of two truths. Either something is in the money or it's not. It's either going to be underlying or it's not. So now what happens if Google goes to 0 and we have this position on? Well, man, we're going to get assigned these 14.15 puts. We're going to get assigned, and so that means we're long at 14.15. But remember, we have the ability to exercise these 14.10s. So that means basically we bought Google at 14.15 and sold it out at 14.10. $5 loss, $2 in premium, $3, no stock gets transacted through our account. And that's why it's important to understand what your risks are and be comfortable with it. Made all the sense in the world when we put it on. I don't think a whole lot of people were calling for this market flush, or they've been doing it for the last 10 or 15 years and have been consistently wrong. But that's how you assess a risk on a put spread, on a credit spread. Okay, let me get this out of the way here. Any questions on that? It's not a particularly long video, only 6 minutes. So if you want to review it, please do. Sure, Brandon, bring it on. You got it, James. So now it's 13:50. Will I need to exercise those options tomorrow? So Chris, the rule, and I've never seen a brokerage platform that is anything other than this, that if you own an option, be it a put or a call, and that option expires 1 cent or more in the money, they will automatically exercise that option for you unless you call them up and do what's called a surrender. So let's say that we do that, we don't have any choice here whether we get assigned or not on the 14.15s because we've sold that premium. We've given somebody else the right to get short Google, but we do have you don't have to automatically, they will automatically exercise that for you. But if let's say we're trading 14.09.99 and you don't want to exercise that, you probably would anyhow, but they're going to exercise that for you if as long as that is 1 cent or more in the money. So you don't need to do anything. It's worst case scenario, but it's not unlimited risk. Brandon, how do you pull up the P&L and the TOS the way that you guys have it set up? Are you talking about down here? I'm assuming you're talking about this watch list. That's just a matter of setting up a watch list, and you can do current account positions. I think Scott set up something that's called Prosper Open Positions. But once you set up that watch list, then you go into here. Oops, didn't want to do that. Oh, Mike, what'd you do? There we go. You want to right click in here, I believe, and you go to Customize, and then you put in what you want. Here we have position quantity, average trade price, which lets us know where we got in, where the last prints of those options were, and then what the P&L open is. These are all columns in here that you can put in there. So it's just a watch list, much the same way that I don't think he has a Thinkorswim watch list. I use a couple Thinkorswim. You just set it up, and it's just a matter of changing the columns that you display. Chris, you don't need to do anything tomorrow. And it's not worth buying the short put in. No, Chris, you need to, because here we are in Google. I'm trading 13 something, 1359. You need to exercise those 1410 puts. They will do that for you. Now, if we trade back up above 1410, then that's perhaps a different scenario. It is a different scenario. Because if you're between the strikes, it may make sense that we just close out the whole thing. But we won't know that until tomorrow. And we would need Google to rally $50 tomorrow for that to even come into play, which probably will not happen. Maybe it will. I don't know the future, but right now it's sitting, let's be honest, in a place where we don't want it to be, but we have our risk covered. So as it stands right now, there's nothing to do. Okay, let me get this video rendered for you guys, and I will put it in there. We may even I may even use it on the blog today, and just as a refresher. Okay, thanks a lot, guys and gals.